CAGNY is a great opportunity. It's once a year. We have everybody in the industry here from a company and an investor standpoint. And we get to kick it off, which is a great spot to be in. So we get to kind of, if you will, establish the first theme of the conference. And I enjoy it because it does give us that stage to let people know how we're thinking about the business more broadly. But also like hearing the feedback from our investors. Many of our shareholders are here, so we're able to get firsthand from a number of people what are they thinking about from an industry standpoint for General Mills, and it allows us both in a broad scale basis in the meeting room and also in one-to-one catch us with some of our investors to share our story. So it's always both a great opportunity for us to expand on the benefits of owning General Mills shares, but also to learn a little bit about what's on their mind about what we can do better or maybe what the industry is going to be doing. It falls in a nice time of year for us because it's not during a reporting window, so we get to take a bit longer term view. And so today we talked about some of the great investments we've made over the past few years, both from an M&A standpoint and from a product standpoint, and what that means for us as we go forward. And we're very enthused about what we see, and we were able to share that with the market today. Yeah, as we look at next year, one of the opportunities that we see is over the last 2 years, we've spent much of our capital, our cash flow, on buying great businesses, Yoplait International, Yoki down in Brazil, Fuji Taste Good, Parampara in India. And as we look at F14, we see a less active M&A calendar for us, and so we're going to increase our shareholder cash returns. Our dividend will continue to grow as it has quite healthily over the last several years, but we'll return to our more normal share buyback proposition, which means we're going to target to take 2% of our shares off the market. Shareholders like hearing that because while they like the investments that we've made and the M&A that we've done, they also want to see a balance between when we're investing in the business at a heavier rate and when we're returning cash to them. And next year will be a cash return year for our shareholders.